As with other companies, the cash flow statement in the bank is going to be broken up into the operating activities, the investing activities, the financing activities, and I've separated this, the shareholder activities. All the operating activities in the cash flow are going to talk to is how much cash the bank has actually received from its core business, mainly lending out money and generating interest and generating fees. How much cash has come in as a result of that core business and how much cash has been paid out in order to sustain and run that core business. That will be your cash flow from your operating activities in the bank. In the investing activities, it will reflect how much cash has gone out of the bank because the bank has invested in assets that are going to be utilized to support and generate additional cash flows in the future. So cash goes out, but in reciprocity, the bank has come to own a specific asset. The other side of that transaction is when a bank disposes of assets that are currently owned, which result in cash flows coming into the business. Those will be your cash flows from investing and divesting activities. The cash flow from financing activities is exactly the same as other companies. How much cash has come into the bank because it has borrowed money in the capital markets, and how much cash has gone out of the bank because it's repaid previous borrowings in the capital markets. The last category, our cash flow from shareholder activities, will talk to how much cash has come into the business because the bank has issued shares, and how much cash has gone out of the business, for instance, because the bank has declared dividends. So a very, very similar format to other companies, but what's driving these cash flows is a little bit different, particularly in the operating activities. But the same principle applies. Cash flow, cash in, cash out from our operating activities, our core business, our investing activities when we buy and sell assets, our financing activities when we borrow money and repay money, and our shareholder activities, whether we get money from our shareholders or pay money back to them by way of distributions of dividends.